welcome everybody. Another video analysis on gold, silver, and oil. I want to talk about these three commodities. A lot of people from the comments have misunderstood my analysis, and I can tell you got a lot of emotions into this trade, and we have to be neutral. We have to be impartial from our emotions when we're investing, because when we're emotional, we will make mistakes and assume things. The narratives are bullish, and I am bullish for gold, silver, even oil at this point. But the reality is that until we see the price this week or the next break through this resistance and consolidate here, there's no other way we're going higher in gold. And what I've been noticing is that a lot of people are expecting gold to just shoot up. Nothing goes on a straight line, guys. Nothing goes on a straight line. It has to consolidate. I'm short-term bearish to neutral, and I said that until we see certain things, resistance break, we cannot expect higher price. So specifically for gold, what we've been seeing here is a bit of a bearish setup. This is a bit of a trap, and I'm seeing lower highs over here, and I'm seeing this resistance that has played out. When you draw a trend line, it has to connect 2-3 times in order for it to be valid. We saw that whenever gold touched this point, which was resistance here, but also the price descending here to this level, it fell down, consolidated, tried to have a breakout through, came down again, checked back, and now it's trying to break this. Notice how today it touched this resistance and dropped. This means that this is a resistance, you guys. So what I'm saying is that until this breaks out and touches this to consolidate here at these levels and go up much higher, which would be natural, then gold has no other choice but to drop much lower. And this is just charting 101. These are very basic charts. Gold is not doing anything out of the ordinary when it comes to charting. It's not being abnormal. It's following the basics of charting technicals. So this is very clear, and this is a very fundamental basis of analyzing price action, especially after a long rally like this. Just because gold is going to drop to 3,500, 3,800 doesn't mean that we're all of a sudden going to be bearish. That's going to be an opportunity to really get into it again. But until that happens, it's not going to go up higher. Okay, this is my perspective on gold, clear as day. Monitor this, screenshot this, and take a look at it later on, because these are the next moves. Breakout here, consolidation here, and then higher prices. If that doesn't happen and we stall here, I see this coming down. Okay, screenshot this. Silver, same thing, very similar. Lower highs in this somewhat of a downtrend. Yeah, we gapped up, but look where we gapped up. We gapped up straight to resistance over here, and there was a gap that had to be filled. Gaps are always going to be filled no matter what. If this doesn't break out here to consolidate, we're not going higher. If it breaks out and then starts going down, I'm telling you with higher probability we're going to come back to these levels. Okay, and so far this trend is just showing lower highs, is showing a bit of a loss in momentum, and I'm expecting silver to drop in the short term. I'm not saying that it's going to be a long-term drop. I'm not bearish, but until you see this resistance being cleared out, the 48 level, to consolidate and go higher, silver is going to have to drop to check down. Okay, it's overcrowded. When trades are overcrowded, the opposite happens of what is expected. So many of you are bullish and expecting higher prices. Be careful, because when the majority is bullish, then who's buying? Okay, if everybody's really bullish, that means that everybody has been buying. I'm looking billboards to buy silver, billboards to buy gold. That is a sign that in the short term is just an overcrowded trade. So at some point, you're going to have deep pullbacks, and that's the name of the game. So let's talk about oil. I'm getting bullish on oil. I was quite bearish on it. I had no trades, but I think this is a great opportunity to get into oil. I think that oil right now is in a phase of a temporary bottom. Um, we still have to see, right? So it's premature, but the signs are there. I really like this move on the downside. I really like these downtrend wedges because they play out in the longer term. This is not something that's going to pan out the next few days or even in the next 2 weeks. This is something that we have to monitor for the coming months. But I can see a break on the upside. I can see a 45%. I can see a 39, 40, 30%. I can see these type of moves happening for oil soon. Okay, soon in the next coming months, just to be specific here. So we could either do something like this again, touch back again and go up, or we can slowly start to consolidate and move up. See, the thing with charting is that whenever you have a chart that stalls a little bit, it's consolidating power for either move up or move down. That's the name of the game. That's what happens. So with oil, I would be a buyer here. I think it's good to buy at these levels. Look, high 50s is a good time to buy into oil and start inching in. There are several other ETFs. I use the USO. There's also leveraged play for oil, but USO would be a good ETF to get into if you want to start inching into long-term call options. My strategy would be buying USO call options. Make it for 9 months. Don't buy short term, except if short term is a really high probability of a move. I'd buy long term calls 9 months in, maybe a year in, and start inching in. I think that crude oil is a good opportunity here, only because of the data centers and the narrative, which again takes a long time to play out. But I do think that oil is oversold at this point, and the seasonality will come into effect. So we could see higher prices even up to the 70 mark. I wouldn't be surprised. But if, let's say, none of these happen, just like I did with gold and silver, I gave you two choices, right? These are two options on the upside. I want to show you what could happen on the downside as well. We could see loss of momentum coming down, touching again, and breaking. Okay, if we do touch, like what happens with a trend line or a pattern, if it's touched too many times, then the resistance becomes weaker, the support becomes weaker. In this case, the support will become much weaker if we're consolidating around here. You could also have a formation like this, for instance, where all of a sudden, we consolidate here, we're flat, then there's a major drop, consolidation, then another drop down. So these are all probabilities here. So guys, I hope you enjoyed this video. Clarification on gold and silver. Don't be emotional about the trades. Let the charts guide the price. Allow the narratives to feed the background. Just look at charts. Charts are human behavior. Money moves much faster than narratives. The media is much slower than money. Money never sleeps. It's a 24-hour move. When you're asleep here in North America, the markets in Europe and in Asia are moving. So money never sleeps, but narratives and media do go to bed. Okay, so just remember that one whenever you're judging about the narratives. Have a good one. Thank you.